is Canada about to experience a foreclosure crisis with lots of people stuck in negative amortization, with a potential Airbnb bust on the way, and with the fact that people cannot rent out their properties and generate income from that? Means that people are going to be in very, very bad places when they lose their job, because what are they going to do? So we're going to talk about it in this video. So first of all, let's get into this Rent Panda report from April just gone. So it's really interesting. So let's talk about household affordability here. So household affordability is very, very bad, and individual affordability is just off the charts. As you can see, it's absolutely insane and nobody can afford it. And we're talking about the rental market right now. But you can see, like, all the major cities, people are spending well above 40% of their income on rent. It's just not a good thing, especially if that money is going to the bank, because essentially interest rates have gone up and the landlord is had to jack up people's rent. But they haven't been able to jack up the rent though to cover the amount the interest costs have got up. It's worth bearing in mind. So just to show you this, Winnipeg, Edmonton, Thunder Bay, Regina, and Saskatoon. Those are the only places in the country, the only cities in the country where household affordability falls under 30%. So people are spending less than 30% of their income on rent. That just shows you what a dire situation we're in right now. And you only have to think about how a recession will impact this. You know, it's actually going to make affordability slightly better for those with good credit, because a lot of these people, they're not going to be able to afford to spend 40 to 50% of their income on rent if they lose one income. It's just the same as the people who are over leveraged in the housing market aren't going to be able to do the same thing. And we're already seeing that with negative amortizations, right? I think you guys already know that. So let's get into now the different provinces, and see where they fall. So this is really interesting. Rent rates by province. So year over year, Alberta seeing the highest change, 27.8%. And in just a quick minute here, we're going to go over how even though rents have gone up that much, it still makes 0 cents to buy an investment property right now in Alberta, which is just kind of crazy. So, you know, looking at other places, you've got British Columbia year over year, 0% change, and actually down on the last quarter. So interestingly enough, if you look at all of Canada, it's actually down for the last quarter, 4.9%. So quite a substantial drop in rents for the last quarter. And I mean, at the same time, what has really happened to mortgage costs? They remain the same. So people are being crushed by these high interest rates despite rents going down. So, you know, another thing that I want to show you, though, is year over year, rents are up 13.1%. Once again, just blowing the CP lie completely away, because we know that number is totally fake. And some of the other highlights on this chart, you've got New Brunswick, year over year change in rent, 16.8%, very high. Saskatchewan, 22.7%. And Ontario, 6.8%, Manitoba, 9.9%. So many of the more affordable places are seeing massive rises in rents because people are struggling and they're moving to those areas to make ends meet. Little do they obviously realize that the labor markets aren't as strong in those places. I mean, particularly when you look at Alberta, Calgary has the highest unemployment rate right now in Canada. And you've got a lot of people that are moving to Calgary. So they're obviously not moving there for fundamentals. And I think we've all figured that out already. It's all emotional reasons about the housing situation and the housing crisis that is being faced. And it just goes to show the level of desperation right now in the economy. It's just, it's sad. It really is sad. That's the only way of saying it. So I want to show you a real example right now. So this house right here is renting for $2,450 per month right now. Okay, so we're going to use this house as an example. And then you've got this house right here that is renting for, I mean, that is for sale, should I say, for $719,000. So similar houses, these houses are actually close to each other. That's why I picked them. I didn't even, I just picked them totally at random. So, there was no selection process or criteria that I went through for this. But you can see that this is renting clearly for $24.50 a month, and this is for sale for $719,000, and it was only listed 4 days ago. So if we put all of this into a calculator here for a mortgage calculator with a down payment of 20%, again, guys, I'm being real generous saying a 20% down payment. Let's face it, a lot of people aren't putting 20% down, especially where we are today in this economy. So the loan amount, $575,200. Again, just an insanely high amount of money, like over $500,000. But, a lot of people are going to look at that from other areas like Vancouver and Toronto and say it's a steal. I mean, this is just as sad as the real estate market's got. I think people, the bubbles have just got so large in certain places. People are looking at smaller bubbles and thinking that they're actually a place of value. And as I'm going to show you, it's not that way at all. So anyway, if we look at this, you can see I put 5% interest rate, 30 years, again, being generous. Home insurance, I put at $2,000. Monthly HOA of $10. Again, these are just on the cheap side. $4,100 a year for property taxes. That's actually what the property taxes are for this property. And then I've calculated the total monthly carry costs for this property, which is $3,600. So, if you got into financial distress, needed to sell the home, and you couldn't sell the home because the real estate market was illiquid, because a lot of other people were losing income and trying to sell their home, then you might be tempted to go to the rental market. But how are you going to do that if you are this far negative on your carry costs? You're just not going to be able to do that. So you're going to enter foreclosure. And this is how a foreclosure crisis can just start really fast and kind of snowball, falling down the mountain and rolling down the mountain, should I say, that just gets larger and larger and larger. And it happens very fast because you've got this across Canada. I picked Calgary as an example because a lot of people point to that and say, oh, it's not too bad. Housing prices there aren't too bad, because they're comparing them with super bubbles. But even if you look at Calgary, you can see how housing prices are particularly overvalued. Now, if you're somebody who's risk averse, then you would look at that and say, well, I don't feel comfortable buying in this environment, because if things do go wrong, I mean, the yield curve is predicting a major recession, not a light recession, much worse than 2008, much worse than what we saw in 2020. So you can imagine what's coming. And I think the yield curve could possibly be predicting what's going on with the banks right now in terms of negative amortization. You've got such a significant amount of the banks' mortgage portfolios where the balances are increasing. That shows you the financial distress, and the numbers are absolutely insane. And we're going to dive into it in a few videos and streams during this week, because I think it's very important, because I think that could be what is actually going to cause the banking crisis, because essentially allowing people to slip into negative amortization, it's shadow defaults essentially, and it does come to an ending point. It comes to an ending point on renewal, or it comes to an ending point when people need to sell or lose income due to unemployment, due to business income that's lost. So there are just major risks there which people aren't acknowledging. And the other thing is, right, the down payment, $200,000 or whatever it is for that house, you could plumb into a 1-year T-bill at 4.88%. So, and there's an arbitrage opportunity there as well to essentially play the fact that if rates come down in between, then guess what? You can sell that at an actual profit without having to wait until the maturity date of that T-bill potentially. So it's very, very interesting. I think these, these Treasury notes, the Treasury Bill, sorry, I get them all mixed up because there's like 3 different ones for different durations, right? But the US 1-year Treasury Bill, safe place to park your money, getting a high yield. I saw on Interactive Brokers today, in fact, that the yield was like 5.1% or something like that, that they were selling for the bonds. And you can buy the bonds at Questrade, Interactive Brokers, Treasury Direct, and probably many other places. So yeah, it's just kind of interesting. So yeah, that is going on. And then I want to just briefly talk about the Airbnb situation because I think this needs to be talked about as well. Not a lot of people are really understanding what's going to happen here. And we can look at the past data and kind of figure it out, right? So in 2020, obviously the listings came down drastically, like call it 30% the listings dropped by in 2020. And that was a very short, sharp recession where obviously they pumped in the massive amounts of stimulus that they did. But you can obviously see how the inventory declined there. And where did that inventory go? That's my question. Where did it go? Well, it went to the rental market. And of course, it went to the real estate market. So what do you think is going to happen in this recession? Exactly the same fucking thing, guys. There's no, and I'm sure you've all worked that out anyways, but a lot of the people in the industry just don't have a clue what the Airbnb dynamic is doing. And what's really, really interesting, guys, is if you look at these more affordable markets, I think the way that people have managed to get away with buying investment properties and speculating in these markets where the long-term rental markets are just not going to let them be able to cash flow positive, they've gone to short-term rentals and justified it there. They've gone to extreme risk, essentially, and justified their purchase by not acknowledging any of those risks, of course, because nobody takes responsibility, nobody acknowledges risk. And that's why most people in retail trading, in retail finance, they lose money because there is no responsibility. Once you have responsibility and accountability for your actions, when it's pertaining to your finances, that's when you can start to really make money. And that's just my opinion. That's what I've read in hundreds of books, and it is just something that is so profound that has stuck with me for a long, long time. And I think is just so important in a world that we live in right now where there is zero responsibility, where the politicians set an example of absolutely no responsibility, and where everybody is just getting bailed out willy-nilly. So anyways, interesting. And another thing, let's look at another city, comparable to Calgary. Another one would be Montreal. I think Montreal as well. It's not even on here for some reason. Oh, yeah, there it is. Montreal. And you can see that Montreal has got an insane of Airbnbs. I think Calgary had around 5,000. You've got 12,452 active short-term rentals in Montreal right now. So just think about how that distorts the market for sales and also the rental market. But just think about how that's going to unwind during a recession, right? It's just not going to last. You're going to see massive declines, as you already saw in 2020. You bottomed out at around 8,800 and you went from around 16,000. So it went down nearly 15%, but there's still just an insane amount of listings, as you can see here. The density of Airbnb listings, it's unbelievable. I've never seen anything like it, actually. And even if you compare this to Toronto. So, if you want a reason why the housing market has been so hot in Montreal, maybe that's your reason right there, because the Airbnb market is just absolutely insane. And you have seen quite a substantial bounce from 2022. You've gone from 9,000 to 12,400. Is that people who are unable to cash flow their rental because rates have risen and they're now going to Airbnb? They're not realizing that they're essentially a hotel manager without even knowing it. And cities like Montreal are also clamping down on Airbnb and short-term platforms. And just to kind of demonstrate my point here, I've used this in previous videos, but you can see if we go back to 2008, this is all employees for air transportation. It kind of gives us an idea of what was going on as it in terms of traveling after 2008 and after previous recessions. And you can see that it tanks, obviously, and so does the employees employed in the airline sector, employed in the tourism sector. And guys, what does that also mean for people who bought investment properties in places like Mexico? In all these other destinations. I don't even think I need to tell you. I was looking at a Trip Advisor forum from 2008 the other day. Just an eye opener. It really was, because it was almost like people using the same excuses as have seen over the past year when I've been in Mexico back in 2008. And it was actually interesting because I didn't even realize this, but even though the US real estate market started to slow down from 2006 to 2008, prices were actually falling, Mexico continued rising. It continued going up until obviously some of these places, they got massively hit in 2008. They'll get hit again because they rely solely on tourism, a lot of these expat areas. And again, people who work from home are going to get hit, but I'll leave that to another video entirely. So anyway, you can see how this went down. It bottomed out in 2013, which makes sense. You're talking about, 4 years after the recession ended. That was probably the bottom in the recession, really, even though the government was saying, yeah, the recession's all over in 2009. Was it really? No, because I was visiting the US a lot of times during that period, and I can tell you, there was definitely still a recession going on. It was a great time to go traveling, actually, because, it was so cheap to go rent places. And this was before the times of Airbnb and those places. I can remember when we stayed in the Florida Keys and we paid like $800 a week for a massive house. It's just insane. You're talking the same house now will probably be $4,000 at least. So madness, absolute madness. But you can see here that it actually recovered by 2020 and then it crashed, and now we've gone a little bit higher right now, and you can imagine what comes next, and it's not going to be good, guys. I mean, the vacation boom, part of the reason why there's so much focus on vacations for a lot of people, and probably what's stimulating these markets outside in these more vacation-oriented areas, is the fact that the pandemic stopped people traveling. So that's very important to know. So you've got this Airbnb crisis. You've got the fact that people aren't going to be able to rent their house out who bought recently and cover their carry costs. So it's an incredibly dangerous, precarious place that we are in right now, and we're at, and it's going to be very interesting to see what happens moving forward. We're going to have to keep our finger on the pulse and see what happens, guys. So anyway, if you've enjoyed this video, you might like that video there. You might also like this video here. Want to thank you so much for watching. I hope you enjoyed this one. I hope you enjoyed the new microphone that cost a fortune. It should be made out of gold for the price.